So welcome back to objective series discussion session of C4S classes, where we'll be discussing MCQs that are important from RBI's exam perspective. So today we'll be discussing MCQs based on a current news topic. So a US Federal Reserve has refused to cut interest rates, and this is seen as hawkish stance by the market. So let's discuss the impact of interest rate cuts by Federal Reserve on global economy. Okay. So this was in the news on 22nd of April 2024. So currently US is facing inflation of 3.5%, which is above their limit of 2%. In order to control inflation, US Fed has decided not to increase interest rate because their target of interest rate is 2%, and currently their economy is facing 3.5% inflation. So let's see the impact of not reducing the interest rates. Okay. So currently, as we know, interest rates in US are high. So let's see what its impact. So first we'll see its impact on capital availability. As interest rates are high, this means US bond yields will be high. So this will attract more global investors. Because risk of default in US economy is low. So this would lead to exit of capital from emerging economies. All right. So second impact, let's see on investments. So higher interest rates would lead to lower investments because investors are more interested in investments in US bonds because they are more secured investments. So as investments are decreasing, this will hamper economic growth and would ultimately result in global slowdown, or global economy would experience slowdown. All right. So third impact we'll see on Indian rupees. So as high interest rates are there, so US dollar demand will increase in the market, in the forex market. So as US dollar demand will increase, INR will get depreciated because when one currency's demand increase, other currency will face depreciation. So what will this result in? When INR faces depreciation, our imports will become costlier, and this would lead to inflation in India. And why is this so? Because if you measure inflation, in inflation, CPI basket is used, and in CPI basket, imported items are also included. So it will have a indirect impact on inflation in India due to depreciation of the Indian currency. Fourth, we'll have US dollar. As we discussed above, US dollar will face appreciation due to more dollar demand in the market. Fifth, we have overall global economy. What would be the impact on overall global economy? So, it will suffer due to decrease in investment and capital flight. All right. Now let's discuss stances of the central bank, because in this article they are saying that the US Fed's stance is hawkish. So let's discuss the different stances also of the central bank. So first stance we have is hawkish stance. Here interest rates are increased or maintained high to curb inflation. And this is exactly what US is doing right now. Second stance is dovish stance. In dovish stance, they may either decrease the interest rate or keep them at lower level to encourage borrowing and spending. So ultimately what they are doing is they are injecting liquidity in the economy. Third is the neutral stance. Here they are keeping interest rates stable and follow wait and watch policy. Wait and watch policy on economic performance of the country. Economic performance. So, all right, we have discussed all the related terms, okay, from this article. Now let's go to the questions that were asked in the objective series. So first question was, decision of Fed would impact decision of Fed to delay rates cuts would affect emerging markets. So the answer would be triggered an outflow of capital from emerging markets. We discussed this. Okay. Next question was impact of Fed's decision on global economy. So it will lead to delayed revival of economic growth because there would be capital flight from emerging economies. Then the question was, what has been the impact of rising bond yields? So as US bond yields were rising, it triggered an outflow of capital from India. Fourth question is, how might a weaker rupee affect inflation in India? So it will push inflation up as imports become costlier. Okay. Next question is, what impact does Fed's decision have on the US dollar? So it will strengthen the US dollar. Another question is, what impact does higher interest rate regime on the global economic growth? So it will slow down as investments dry up in the emerging markets. And next question is, what are the potential implications of taking a dovish stance? So in dovish stance, what we are doing, we are reducing the interest rates. So borrowing cost will get lower because interest rates are decreased. But as borrowing costs are decreasing, it will lead to higher inflation because money supply in the economy will increase. So that's all for today. Thank you and have a nice day.